This is November 23, question 3A. November 23, question number 3A. Consumer products entity, entity A limited, lessee, enters into a lease agreement with entity B, lessor, for a dedicated production line to manufacture one of its store brand household products for a period of 3 years. Entity A limited has agreed to order a minimum 1 lakh units per month and to make a payment to entity B limited as per the following agreed rates. So we entered into a contract to purchase, order minimum 1 lakh units per month to make a payment to entity B limited as per the agreed rates. എന്താണ് agreed rates? 240 per unit if ordered quantities between 1 lakh to 1 lakh 20,000. Variable consideration, will feel, oh, is it like variable consideration? But see, 246 per unit if the ordered quantity is between 1 lakh 20,000 to 1 lakh 50,000 units. Okay, so fine. Some household products are manufactured by entity B limited. Entity A limited is agreed to purchase that household units up 1 lakh to 1 lakh 20, 240 rupees, 1 lakh 20 and above 246. Okay, as per the terms of agreement. See, most important, reading the question with so much of presence of mind and avoiding rereading. Okay, read the question with so much of presence of mind as per the terms of agreement. So far nothing. We entered into some contract to buy some household products. Okay. As per the terms of agreement, entity A limited has the exclusive right to use the production line. Entity B limited cannot use the specified production line for any other customer. Oh, I see. Entity B limited should manufacture the products, right? So to produce that products, there is a production line and the production line can be used only for entity A. Okay, fine. The type of household product is specified in the contract. Entity A limited issues instructions to B limited about the quantity and timing of products to be used and delivered. If the production line is not producing the household product for entity A, it remains idle. What are they trying to tell you? What is given? What are they trying to tell you? They entered into a purchase contract. First information that you need to write is this is not a purchase contract, this is a lease contract. And we need to say this is a lease contract and lessor lessee information we should write. From the first paragraph, they are trying to say that production line is an identified asset. Yes or no? Production line is an identified asset. The entire economic benefits from the asset is received by lessee. Lessor operates the asset, but lessor operates the asset on behalf of lessee only. So finally, we should write that 4 points and conclude this is not a purchase contract, this is a lease contract. Then what is given? If the production line is not producing the household product for entity A, it remains idle. Oh, fine. Entity B limited operates and maintains the production line on a daily basis. Okay. Entity A limited has estimated that for manufacturing each unit, entity B limited incurs an average cost of 195. Further, the observable standalone price of the rent of production line is 60 lakhs per month. Cost of entity B to do this process is 195 and standalone selling price of this production line is 60 lakhs. Okay. IBR is 10%. So I am thinking whether it is 115 or 116. 116. If it is 116, I need IRR. If given IRR, we should take, but here IBR is only given, means we will take IBR. Entity A limited concludes that the arrangement contains a lease. Oh, it also elects to apply the practical expedient of not to separate the non-lease components from lease components. Accordingly, it separates non-lease components from the lease components. Analyze the above and identify the lease components and non-lease components. Compute and allocate the consideration. Compute the lease liability. Determine the recognition and treatment of lease components and non-lease components. Okay. We'll do So how many units you are planning to acquire? Minimum 1 lakh. A Limited agreed to order a minimum 1 lakh units. So minimum 1 lakh units means payment, lease payment or payment to be made each year. We are not giving anything for the asset. We are not giving anything for the asset. For 1 lakh units, you need to give 240, which means 240 lakhs. What is the accounting of this 240 lakhs? Your professionals. So here we are saying this is a lease contract. We should find out if there is a lease contract, there should be an identified asset. What is the identified asset here? Identified asset is pipeline. Now the question is, if there is pipeline, identified asset is pipeline. Are you paying for the pipeline exclusively? No, for the units, which means we need to allocate as per IND AS 116. As per IND AS 116. Just generally allocation of lease components. If the lease and non-lease are allocation of lease components in a contract is in a contract, if there are multiple lease components, allocation of lease components in a contract is compulsory, mandatory. It is mandatory that various lease components in a contract has to be that lease payments towards each component has to be separated. It is mandatory. It is mandatory that in one lease contract, if there is a payment towards production line, if there is a payment towards truck, if there is a payment towards a building, then that 24 lakhs on each identified asset that needs to be separated. That is mandatory. Now, as per IND AS 116, allocation of lease and non-lease component is allocation of lease and non-lease. If there is a payment, not just for one asset, but for asset and some other expense. If there is asset and some other expense, allocation of lease rentals between lease and non-lease components is mandatory or optional. It is Allah. Lease and non-lease, it is optional. Lease and lease components, different lease as lease components, different assets, it is mandatory. But if it is lease and non-lease component, it is optional. The companies can apply practical expedient not to separate. It is optional. Companies can adopt practical expedient not to separate. That is why this question says the company is not taking that practical expedient. If you don't want to separate, don't separate. You do the practical expedience. But here what the company says, if you have listened the question, the company says we do not require that practical experience. We don't want that practical experience. Practical experience venda, which means we are planning to separate. Are you clear? We are separating. So how to separate? How to separate? So you are paying 24 lakhs. 24 240 lakhs. Sorry, 240 lakhs. Sorry, 240 lakhs. 240 lakhs you are paying for pipeline and other expense. Okay. So this 240 lakhs has to be allocated in the ratio of standalone price. So if I am giving this pipeline alone, how much you would have charged? That is what given in the question. The standalone price of pipeline rent is 60 lakhs not to say the.
Yes.
Yes. And if I am doing only the work, if I am charged expense, if I am incurring, what is given here? 195 per unit. See, listen, entity A Limited has estimated the manufacturing of each unit. B Limited incurs a cost of 195 and standalone price of the production line is 60 lakhs. So we will allocate So this is a lease contract. First, we need to allocate this to 40 lakhs in the ratio of pipeline 60 lakhs. Pipeline is an asset. Towards asset vannale lease avullu. Towards asset 60 lakhs, and for expense of manufacturing 1 lakh units 195 lakhs. So we'll allocate 240 into 60 by 60 plus 195 255. So 240 divided by 255 into 60, 56.47 towards lease liability, and 240 minus 183.53 is towards expense to manufacture. Yeah, other expenses. So idana the first answer. Analyze the above. We analyze. This is a lease contract. So there are two components in it. One is lease component, which is a production line, and non-lease component, which is the manufacturing cost. We are paying to cost of manufacturing the products. Are you clear? First one, are you okay?
Yes.
Then compute and allocate the consideration. Yeah, consideration we have allocated, that is 56.47 and 183 point something. 53. Okay. Now compute the lease liability. Easy. Lease liability will be 56.47 into
2.4.
That is for 1 month. 1 month ano? Yeah.
56.47. Okay.
That is, see, this is per month. This is per month. Okay. So here also 1 lakh. Either 1 lakh units per month. So this is 56.47 into 12 into 2.49. 1687.3236 lakhs. 16 lakh 87 something. Determine the recognition or treatment of lease components and non-lease components. So we'll write first one. ROU asset. It is better to write the entry, then there is no confusion. ROU asset to lease liability. Now compute the figure.
1687.3236.
3236. This is my first. That is 16 crore 87 lakh 360. Okay. Now interest to lease liability. How much? This into 10%. Okay. Lease liability to bank. Lease liability to bank. എത്ര എടുക്കും lease liability to bank? How much will be the lease liability to bank?
56.37.
Yes. Lease liability to bank. The balance you should show that other expense to bank. Are you all listening? You pay 240 lakhs. When the third entry, first entry is okay. Second entry is okay. Third entry you can write lease liability, expense, other expense, total 56 point something and 183.53
6.47
into 12 to bank. Is there a this particular entry I am not clear, this particular figure I am not clear. Only if you try this, a doubt verulu figures like there will be a clarity only if you try something not down in the notes. So from out of bank we allocated. Yeah, lease liability we identified 240 into 60 by 255. That into 12 is lease liability to bank. Balance is expense to bank. Are you all clear?
Okay.
One 16 crore 87 lakh 32 360 divided by 3.
5 crore 62 lakh 44,000.
Correct. Anything doubts on? Is there anything to be explained, or else we'll move on? In MTP, there is a very good question this time. MTP question 5B. Can I read this? Question number 5B. Listen, most important thing is presence of mind while reading the question. Okay. Feel Fresh Limited, the company, Feel Fresh Limited brackets, the company, okay, is into manufacturing and retailing of FMCG products listed on stock exchanges in India. Okay, so just a general paragraph, just a general line. One of its products is bathing soap, which the company sells under the brand name Feel Fresh. The company does not have its own manufacturing facilities for soap, and therefore it enters into arrangement with a third party to procure the soaps. So this is what happening everywhere now. So when we see a brand name, we feel that, oh, they manufacture the soap, so the quality will be good. So all the soaps will be manufacturing in one place. Only the labeling is done by the companies. So the company does not have its own manufacturing facilities. So it will procure the soaps and sell in the brand name Feel Fresh. The company entered into you should be very careful. The company entered into a purchase contract for 10 years with Miss Radhe. So in the previous question, there was a clue that there is lease. Contract contains lease. Yes. Here there is no clue that the contract contains lease. What they are telling is they entered into a purchase contract. Following are the relevant terms of the contract with Miss Radhe. Miss Radhe has to purchase a machine costing 10 lakhs from the supplier as specified by the company. Oh, so it is like Feel Fresh entered into a contract with Radhe. Okay, fine. Feel Fresh has entered into a contract with Radhe to purchase soaps. Okay, fine. So Radhe has to purchase a machine costing 10 lakhs from the supplier as specified by the company. Oh, Radhe has to purchase a machine. So Radhike, they have to buy a machine to satisfy the contract. Okay. The machine will be customized to produce the soaps as designed by the company. Which company? Feel Fresh. This machine cannot be used by Ms. Rathe to produce the soaps for buyer other than the company due to design specifications. The machine has a useful life of 10 years and the straight line method of depreciation is best suited considering the use of machine. Come on, guys. What do you understand from this? Yeah, from this information? From this information, I understand this contract contains lease because there is an identified asset, a machine. Then substantially all the economic benefits from the asset is for Ms. Radhe has purchased the asset. Radhe is the owner of the asset, but the machine will be customized to produce the soaps as designed by the company. This machine cannot be used by Radhe to produce soaps for buyer other than the company, which means substantially all the benefits, all the Feel Fresh direct the use of the asset, and the customer operates or designs the asset, or lesser designs the asset or operates the asset on behalf of lessee. All the four conditions are satisfied. Therefore, we can conclude that the contract contains lease. So you should say this is not merely a purchase contract. This is a lease contract. Actually, as per the contract, we give so much of importance to substance over form. As per the contract, it seems to be purchase, but it is there is an asset involved in it. So there is a leased asset and other expense. The same thing we need to do. What same thing? I didn't understand. The company will pay. 4.75 per SOP for the first year of contract. Okay. So this is not mentioned anywhere. This is a lease contract. You should pay 4.75 per SOP for the first year of contract. This is calculated based on the budgeted annual purchase of 7 lakh SOPs as follows. So company believes company will buy 7 lakh SOPs. So for one SOP, they are paying 4.75. And they show the breakup of this 4.75 as below. Variable cost 4. Cost of machine 1 lakh 74,015 divided by 7 lakhs. What is this 1 lakh 74,015? I don't understand. Let's see. 0.25. Radhe's margin. So that is how they are charging 4.75. Okay. In case company purchases more than 7 lakhs, that is budgeted number of SOPs. Are you all following? Do you have
Yes.
presence of mind? See, again and again, I'm telling you, your attitude matters a lot. Just imagine you're a chartered accountant reading a situation for giving an advice. Our attitude order, you should read this, okay? Not as a student. Oh, why this question is not finishing? That is not the right attitude. അതൊക്കെ ഞങ്ങൾക്ക് അറിയാം. Okay. അപ്പോൾ if the company purchases more than 7 lakhs, that is budgeted number of SOPs in the first year, then cost of machine of 0.25 per SOP will not be paid as the SOPs procured in excess of 7 lakh units. If you buy more than 7 lakhs, you need not pay 4.75. You need to pay only 4.5. Yes or no?
Yes.
Yes. However, in case company procures less than budgeted number of SOPs, then the company will pay differential unabsorbed cost of machine at the end of 1 year. Oh, I'm not understanding. For example, so they understood, oh, there can be confusion. For example, if the company purchases only 6 lakh SOPs in the first year, then the differential amount of 24,015 will be paid. Oh, so they are telling if 6 lakh units only paid, 6 lakhs into 0.25. So I'm just calculating 6 lakhs into 0.25. 1 lakh 50,000 only will be collecting, but my cost of asset is 1 lakh 74,115 per year. Again, 1 lakh 74,015. How they have arrived? Let's find out. So difference of 24,015 will be charged from the customer. So that is the arrangement between the company and Radhe and Feel Fresh. It manslayo. Did you understand? See what they're telling
Yes.
us? Variable cost of manufacture. For manufacturing soap, my cost is only 4 rupees. But to use that asset, my cost for the asset, maybe like depreciation concept. My fixed cost of asset is 1,74,115 per year divided by 7 lakhs. Okay. For cost of asset, cost of machine, this is the cost they have arrived, divided by 7 lakhs. So, 1,74,015 will be incurred by the company towards cost of machine. So, if you buy only 6 lakhs, 6 lakhs into 0.5 is not sufficient. So, the balance unabsorbed amount also to be paid by the company. So, variable cost will be actualized at the end of each year. Okay. Cost per SOP is calculated for each year in advance based on budgeted number of SOPs to be produced. An amount of 1,74,015 shall be considered each year for the cost of machine for year 1 to year 8 while calculating the cost of SOP. Machines cost is, or let's find out. Any differential under absorbed cost shall be paid by the company. Okay. A charge of, see they are telling, listen, a charge of 1,74,015 per annum for the machine is derived using borrowing cost of 8% per annum. For year 9 and year 10, only variable costs and margins will be paid. And did you understand anything? What is given? It is very simple, okay? Did you get what it is? So what they're telling is, one...
ATS ആകുമ്പോ അസറ്റിന്റെ വാല്യൂ പറയുന്നോ?
അറിയില്ല, നമുക്ക് ലെറ്റ്സ് കാൽക്കുലേറ്റ്, നമുക്ക് ഒന്നും അറിഞ്ഞൂടാ. ലെറ്റ്സ് കാൽക്കുലേറ്റ് 1,74,000. See, cost of my asset is 10 lakhs. 1,74,015 I need for the asset. For 1 year, cost of asset I need is 1,74,015. That is calculated using a borrowing cost of 8% per annum for 8 years. 9 and 10, just variable cost will be collected. Asset will be fully used for the assets value we calculated only for this 8 years. So just do 1,74,015 into annuity factor at 8% for 8 years. Cost of machine will not be collected in year 9 and year 10. Year 9 and year 10, we will not collect cost of machine from the buyer, feel fresh. Only for 9 years. Only for 8 years. Year 9 and year 10, we'll collect only variable cost and margins. Okay. So which means how much you're getting? 1 divided by 1.08. 1, 2, 3, 4, 5, 6, 7, 8. GT 5.7466 into 1,74,015. 10 lakhs exact. So 10 lakhs, one mechanic and full figure eduthu. Maybe that is why we normally round it off and take some figures, 0.3 decimals, 4 decimals. But here I have multiplied with the full amount. So you got 10 lakhs one. So what do you understand from this? Okay. So 10 lakhs is an asset. Asset, my cost for the asset is 10 lakhs. This I am expecting to recover over a period of 8 years. I'm expecting to recover the asset value over a period of 8 years. To recover the asset value over a period of 8 years, how much you should collect or how much you should recover each year? 1,74,015. Okay. Did you understand this? Up to this, are you clear? എല്ലാവരോടും കൂടി ഞാൻ ചോദിക്കണേ now question വായിച്ചെന്നെ അതാ പറഞ്ഞത് this is a very good question. What is given next? Miss Radhe does not have any okay, next page it's coming. I think today my network is a bit slow. Miss Radhe does not have any right to terminate the contract, but the company has the right to terminate the contract at the end of each year. So this is a non-cancelable lease. Non-cancelable lease means if you want to cancel, you cancel it freely? No. If you want to cancel, you can cancel by paying the termination penalty. Normal course you cannot cancel, but if you want to cancel, you need to pay termination penalty. That is what called as non-cancelable lease. Then what do you mean by cancelable lease? Any party can cancel at any point of time without a penalty. There is no legal backing for that then. So this standard IND AS 116 applies only for non-cancelable lease. So this is a non-cancelable arrangement. However, if the company terminates the contract, it has to compensate Radhe for any unabsorbed cost of the machine. For example, if the company terminates the contract at the end of second year, then it has to pay 1,74,015 into 6 years. Oh. If it terminates the contract after 8th year, then it does not need to pay anything. Understood. Since the cost of machine would have been absorbed. In the first year, company purchases 5,50,000 SOPs at 4.75 per SOP. Analyze the contract of the company with Ms. Radhe and provides necessary accounting entries for first year. In accordance with IND AS, with working notes, assume all cash flows occur at the end of the year. Oh, നല്ല question. Very good question. Do you need to read the question once more? No. No, very good. So, what are the steps to be done? So, step number 1, first I need to write in detail as per IND AS 116. This is not a purchase contract. So, I'm just quick question MTP, question number 5B, first part. I'm not writing it in detail. So first part of my answer should be write about lease. 4 conditions. At the inception date, 4 conditions. Therefore, this is first you should write about lease and write all the 4 conditions. Therefore, 4 conditions. This arrangement, finally I will write a conclusion. This arrangement is a lease arrangement and not a purchase contract. Arrangement and not a purchase contract. Okay. First part of my answer. Are you clear? Yes, you will write this lines fast, right? Because you have studied really well. You will be able to write the points. Lease term is the term in which both parties have enforceable rights and obligations. Or it should be a lease term is 8 years. Again, as per IND AS 116, only non-cancelable leases. Only non-cancelable leases are considered. And lease term is the term in which both parties have
enforceable right.
yes. As per IND AS 115, contract term is the term in which both parties have enforceable rights and obligations. In the same way, lease term is the term in which both parties have enforceable rights and obligations. I'm not writing it. Both parties have enforceable rights and obligations. Okay. Therefore, we are confirming that lease term is for 8 years. Are you clear? Enforceable rights and obligations. Very good. You are impressing the examiner. In next endana? What is next? Then my third part. My third part is, what is the third part? Computing lease liability, ROU asset. How much should take as lease liability? How much will you take as lease liability? How much will you take as lease liability?
10 lakhs.
Why you are taking 10 lakhs? Lease liability is 10 lakhs. Very good. Because towards the asset, you have to pay. See, the company is charging, all of you, company is charging
4,74,015.
4,75,000 per SOP. That includes cost of machine. Minimum they will cover 1,74,015 anyway has to be paid by the
Customer.
yes or no? So what we'll do is 1,74,015 is recovered as the cost of asset into 0.5 something into annuity factor at 8.8% for 8 years. Yes. 5.746. Okay. So ROU asset to lease liability is 10 lakhs. Guys, are you all clear?
Yes.
Yes. Now that's it. Now, what are the requirements in this question?
Entry in the first year.
Yeah. The question first is analyze the contract. Analyzed the contract. This is not a purchase contract. This is a lease contract. And provide accounting entries for first year. Assume, accounting entries for the first year. What are the accounting entries? This is my first accounting entry in the first year. Right?
Yes.
Second accounting entry on the parayo. Second accounting entry is
unwinding
interest to lease liability. How much? 10 lakhs into 8% alle. So 80,000. Being the interest unwinded. Okay. Now lease liability to bank. Then ഇത് മാത്രം കൊടുത്താൽ മതിയോ lease liability to bank 1,74,050 alone only you required to pay? No. Then for balance 5 lakh cost of SOPs or expense to bank. How much you are paying towards expense?
Cost എന്ന് പറയാൻ പറ്റുമോ? നമ്മുടെ മാർജിനും കൂടി ഇല്ലേ?
അല്ല നമുക്കത് കോസ്റ്റ് അല്ലേ? That includes Radhe's margin.
Okay, നമ്മുടെ ഫീൽ ഫ്രഷിന്റെ ബുക്കിലാണല്ലേ? കൺഫ്യൂസ് കുഴപ്പമില്ല, മനസ്സിലായി.
Cost of SOPs to 4.75 എടുക്കണോ 4.5 എടുക്കണോ? You tell me.
174 അക്കൗണ്ട് ചെയ്ത് കഴിഞ്ഞാൽ 4.5 എടുക്കാം.
Already we paid this much towards asset. So I need to take only
4.5.
4.5. Yes or no? Are you clear? Uh, 174 is 0.25. Yeah. Yes. See, actually, we are paying 4.75. But anyway, we have accounted it as lease liability to bank. So should I take it further? That will be duplication. No. I have good level of presence of mind. All of us. 24,75,000. Now don't forget to, so lease liability accounting, this is done. ROU asset. Depreciation to ROU asset. How much is depreciation to ROU asset?
1,25,000.
Yeah, depreciation to ROU asset also. 5B towards the end. Just quickly, let's run through the answers given. So first, identification of contract. Feel fresh. Okay. And then detail that we are not reading. So right to obtain substantially all the economic benefits, right to direct. Reasonable, so contractually bound till 10th year. Refuse to make this as it is assumed as is reasonably certain. Or they have taken lease term as 10 years. Not, maybe they have written like an assumption. Though the lease is not contractually bound till 10th year, lessee can refuse to make the payment anything without, but it is assumed. See, this is just based on an assumption, okay? Yeah, it's just an assumption. It is assumed. It is assumed that it will not exercise the option to terminate. So what is more correct is lease term is 8 years, but it is written like an assumption. If lease term is taken as for 10 years, then depreciation should be 10 lakhs divided by 10 years, 1 lakh. If you take it as 8 years, 10 lakhs divided by 8 years. Okay. Are you all convinced what I'm saying? Here, actually, lease term should be, I answer, lease term is the term in which both parties have enforceable rights and obligations, and lease term should be the period in which that non-cancelability is there. So non-cancelable leases only can be considered as leases in IND AS 116. Okay, first initial paragraphs, if you read, that is what they have given. But they assumed that that contract will continue till 10 years. And they are telling, though the lease is not contractually bound, which means lease is contractually bound only for how many years? 8 years.
8 years.
8 years. So nothing wrong if you write 8 years, they cannot reduce your mark. The identification of lease payments in substance, 1,74,015 you are paying, 10 lakhs. So ROU asset trust, I think it's fine. ROU asset to lease liability, 10 lakhs. Interest expense to lease liability in 80,000. Depreciation, if you assume lease term as 10 years, depreciation will be 1 lakh. If you assume lease term is 8 years, depreciation will be 1,25,000. Lease liability to bank, cost of sum. First, it is all pakka. I hope that's okay.